on Australia's Business Channel. This is Market Moves with Richard Goncalves.
Hello, I'm Richard Goncalves. Welcome to the program. What a day we had. Despite Wall Street closing weaker, we opened quite dramatically higher, as much as 2% firmer, although we were pulled back towards the end of the afternoon. The high we reached for the day, 5,064 for the S&P ASX 200. The low, 4,968, so we closed towards that low. The biggest market movers, the best ones anyway, the biggest contributors to the 200 by index weight, BHP Billiton, it added 32 points. Stocks that tried to pull the market into the red included Westpac. It tried to pull 10 points off the S&P ASX 200, Westfield, CSL, CBA and NAB. So most of the banks doing quite poorly today. My guest tonight to discuss today's market moves is Hugh Latimer from Aurora Funds Management. Hugh, thanks for coming on.
No worries, Richard, thanks.
Like I mentioned, Wall Street opened or closed weaker. We opened quite dramatically higher, but then started pulling back. Run us through the movements during the day today. Why did we see the movements?
Well, we had the market at lunchtime even up about 80 points, which was quite phenomenal when you had a lot of the US indices down.
Let's take a look at the stock of the day, which is Leighton Holdings. It posted a 35% increase in full-year profit. They're seeking to raise $700 million. We saw CSL today successfully place $1.75 billion and close that offer early. So do you think that this company will have no trouble getting that $700 million from instos?
In the current climate, it's very difficult to raise money. I know, being in the funds management market, how difficult it can be. But this sort of quality company, this is one of the companies to look for.
Let's now take a look at the winners on the share market today. On the S&P ASX 200 by percentage change, the number one stock is Pan Australia, up by 20%. So we're seeing lots of resource stocks there. But Hugh, if we can talk about another stock that did quite well, BHP Billiton. BHP rising 5% today. So obviously the surge today was commodity driven and BHP contributing the most to the overall index. It's increasing its board number from 11 to 13. Yeah. Is a bigger board necessarily a good thing?
I don't necessarily think it is. I remember when the Coles Myer board was run by 11 people.
Another company doing well today, David Jones, up 10.6%. A profit upgrade, who would have thought? We were talking about a few broker recommendations that placed some buy recommendations on David Jones a couple of weeks ago. But run us through what David Jones is doing well when others aren't, because we're seeing a couple of upgrades. We saw JB Hi-Fi a couple of months ago, but then we also saw downgrades from Clive Peters and Noni B. So some are doing well and others aren't.
Yeah. What we're seeing here, and this is a very difficult market to wade through, is this discretionary spending market hitting the wall as we've had higher interest rates over the last few months.
Let's now take a look at the losers. These are the bottom stocks by percentage change on the S&P ASX 200 today. The worst stock, Macquarie DDR. Well, let's take a quick check now on the volumes today. We saw just over 1 billion shares trading hands today. Telstra, the most popular, 65.5 million shares trading hands. Oz Minerals, GPT Group, Admiralty Resources, that's that small specky stock on that list. Lihir Gold, Goodman Group, Westpac, BHP Billiton, Pan Australia, Qantas, ANZ, and then there's an unusual stock that we never really talk about, Nido Petroleum, 15.4 million shares. Hugh, I know nothing about Nido, and it's just appeared on that list where it's not really ever on that list. What do you know about it?
Well, you've only got to look at the word petroleum and it tells you here's another good oil find. Right. This is a Filipino-based oil field. Speaking
of interest, let's now take a look at the substantial holdings changes today. Just a few to go through. Guinness Peat Group decreasing its stake in Tower. We already knew that GPG was offloading its stake. What I'm curious to know is why did GPG do this when even it said, hey, there's still growth to go in Tower?
Yeah, tough times in New Zealand. I hate to say it, Richard, but tough times in New Zealand. And a lot of their asset management business would be based there. It's based here as well. And
those that hit yearly lows include Admiralty Resources, a low as 12 cents before closing at 14. Babcock & Brown Power closing at its yearly low of 49 cents. And Premier Investments closing at 5.34 but a low of 5.30. I'll take a quick check of what the brokers are saying today. ABN AMRO has a buy on Telstra. It reckons the telco delivered a good FY08 result and is confident it will remain on track to achieve good growth this year and next. It has a target price on the stock of $5.21. And UBS has a buy on CSL. Its earnings were in line with the broker's forecast, but even more important was the $3 billion bid for American company Talcris. If successful, the broker says there's significant value upside. Target price on the stock, $46, and all other brokers reported by FN Arena have a buy recommendation on the stock also. If you'd like more information on those recommendations, you can visit our website businesschannel.com.au and follow the market moves links to FN Arena. If we've got time, I'd like to talk about all those three stocks quickly on CSL today. Shares came back trading. It was successful in raising $1.75 billion from the instos. Obviously good news for the company.
It's good news. It's a friendly takeover. It's a good merger for the company. It gives them about 20% share or market share in that burgeoning plasma